Welcome to this week's edition of Trade the Trend, a weekly video discussing where the stock market is going. I'm Jason McIntosh. It is Friday the 25th of March 2022. As always, this is general commentary and doesn't take your personal situation into account. Alright, with all that said, over to our first chart. Well, we've got the S&P 500 on the screen here, and well, hasn't it been an interesting week despite all the bad news that's been thrown at this market? It's actually rallied. We've had a good rally over the past 7 days, adding to the rally we had over the few days before that. So we've got war, inflation, we've got rate hikes in there. There's been pretty much something for every bear in terms of throwing the bad news at the market. But look, as we know, the market didn't go down. It's gone up. So what I'd like to do now, let's jump over to the 4-hourly chart. As you know, the 4-hourly charts are great at getting the details within these individual bars to get a closer look at the price action. And when we do this, we go over to these 4-hourly bars. Very interesting. Like what we've got here, just up through this section here. This is what a short covering rally looks like. So we've talked about this bullish wedge formation over the last few weeks, which we saw developing a couple of weeks ago, and then we talked about the possibility of it being there. Then we got the breakout. I think that maybe the breakout was a couple of weeks ago, and then this has all sparked this short covering rally, which we've continued to see up through here. So the short covering rallies, this is what they're all about, and there's Look, we've been talking about this for a few weeks, and it's interesting because I know this set up so well. So just down here a couple of weeks ago, it's looks probably more than a couple of weeks ago now. It's maybe 2-3 weeks ago, when everyone was so bearish. I know this situation because I've been in the dealing room, I've been on the trading floor in these sort of environments when you've got a market which appears very vulnerable, and it was very vulnerable. And so many traders are sitting short the market down at these levels. They've gotten their shorts on. I know what I used to do. I'd look for breakdown points, maybe down through here or down through here. I'd get short, have a good trailing stop on it, so give the market plenty of room to move. Add to my positions on the way down, as so many of the traders do. And you find down around these key points, the market gets very short, and there are a lot of people sitting there waiting for the next leg lower, hoping for the next leg lower to make a lot of money. The market often doesn't deliver those big windfalls. In fact, what you often see is what we've actually seen in recent times. We've seen the short covering rally. The market reverses, takes out a lot of those shorts. So the question now is where to from here? Where's this market going to go next? And now, I think the key thing to know is that we actually don't need to know. We don't need to know exactly what's going to happen next. It's all about having a strategy that's really going to help us deal with whatever happens next. And I think if you've got a good exit strategy, this is the first really important thing to understand at these points. If you've got a good exit strategy, so for me, it's one that uses a wide trailing stop. That's what I'm using myself. That's what I'm using through my Motion Trader subscription service. And if you're using those wide trailing stops, then chances are, let me just duck over to the daily chart. You're using those wide trailing stops, chances are you've been able to see off a lot of this volatility so far. And that and I know with my own portfolio, I have been exiting stocks over the last few weeks during this period as the trailing stops have been hit, but the majority of my portfolio is still intact. I've been able to see off this correction so far. Now, we don't know what the future is going to bring. Maybe there's going to bring more volatility and take out a lot of my portfolio. But at the moment, a strategy of using wide trailing stops has been able to see off a lot of this volatility, a lot of this uncertainty and fear which we've seen in the markets. And I think where we are now, I think there are several scenarios on the table. So let's go back to that 4-hourly chart. And I think the best case scenario would be that the market market pauses somewhere around here, maybe goes a touch higher, maybe it starts to consolidate tonight, but it starts to over the next couple of weeks, 3 weeks, starts to track sideways, finds good support. We want to see the market finding good support. We want buy on dip. We want those buy on dip traders coming in and supporting any pullback. Just putting some Fibonacci's on here to give us an idea. Potentially the market could come back into this zone in here and still remain structurally intact in terms of being able to put on further rally. We want to see it well supported over the next few days, next few weeks for that matter, and then from there potentially we would get like another leg higher, some more consolidation, then higher again. I think that's the best case scenario for this market. We want to see develop is we want to see this sequence of higher highs and higher lows. That's the natural state of a bullish market. That's how markets advance and continue to advance over a period of time. And we also want to see the volatility continue to decline. So we don't want to see this sort of price action where we've got the move up, but then we've got the sharp moves lower. It's volatility is telltale sign of an unstable market, and we've been seeing that in the VIX index over the last week or so. We've seen volatility come back, so that's encouraging. But we want to see that continue. And look, you could say that the market actually has done its minimum in terms of a correction. So if we go back to the daily chart, look, it depends how you analyze this, depends how you want to look at it. My feeling is that we're correcting this entire advance, and we'll get to this in a minute. And if we're correcting this entire advance, there's probably more in this yet, but that may not be right. You've always got to have your alternate scenario. You've got to understand the other possibilities on the table. The other possibility is that we've been correcting the move from this low here. So we had an initial move higher. We had a consolidation. That was a considerable consolidation through there. Then we had another big rally over the period from around November 2020 through to the high point. So if we were correcting that part of the move, just putting the Fibonacci's on there, we've done enough to say that correction's over, which then does support the possibility that we get to see this sort of price action and a move to new high. So that scenario is on the table, and it's possible that this bullish trend does re-engage. So it's not my preferred scenario. If I had to say either way what I thought would happen, it's not my preferred scenario, but I think I do think it's possible. And if you've got the right strategies in place, then I think it's possible that you can position yourself for this scenario, even though you're prepared for more volatility in the weeks or potentially the months to come. And that's why I say we don't need to know what the market's going to do for sure. What's it going to do next? We don't need to be able to answer that with certainty. Of course, we can't do that anyway, but we don't have to take a strong position one way or another, because we've got the right strategies. We can handle either scenario. We can handle a scenario where the market rallies and goes to new high, or where the rally stalls and then comes back. And so I don't want to put myself in either corner. I don't want to put myself in either the bullish corner or the bearish corner, because that's what a lot of people do. And the problem when you do that, the problem when you get either, you say, look, I'm dead set bullish on this market, or I'm bearish and it's got to fall. When you do one or the other, you make it so likely that you end up wrong and just end up staying wrong for a long time, and the market moves either way without you on board. Or if you're rock solid bullish and the market's falling, that you stay in stocks for too long. So you've got to be flexible with how you approach and how you handle these situations. So it's a bit like we want to play the ball that's delivered, and rather than play some preconceived idea of what should happen. So that's where your strategy is so important. Having your strategy to go with the momentum when you got the momentum working to the upside, but then having your exit strategies in place in case that momentum doesn't continue. And now I want to go over the other scenario, the scenario which I'm very much mindful of at the moment with these with the US market and also the Australian market and some of the other big Western markets. What I'm mindful of is the zigzag correction, where you get the first leg down, then you get the B wave back up, so the zag, you get the zag higher before you get another zig lower. So it's possible that this rally we're getting at the moment is all part of this B wave rally. So you never know how high these goes. It could come up and almost retest the old high. It could pull up around 4,600, 4,700, and then in maybe a month or two or three's time, perhaps as we start moving into the northern hemisphere summer, we get another leg lower. So that's what I'm very much mindful of now, that we get this second part of a larger correction from those COVID lows. And I just look at what the Fed's been trying to do, or what it's trying to do at the moment. So they're trying to rein in inflation, we know that. And they're also trying to do so without scaring the market. They don't want to get a situation like they had back in 2018. So we just look at this period back in 2018 when the Fed was talking about they wanted to raise rates, wanted to pull back the quantitative easing programs, and the market really took flight and it got a sharp move lower. The Fed doesn't want this. Fed wants stability in the stock market, and so this is why it's a very precise balancing act they've got to do at the moment to pull this off, to pull down inflation without spooking the market. And I don't think they want to see this. I think the Fed would rather see the markets just track sideways for many months, just take the steam out of things, and that's what they're probably trying to engineer with their rate hike cycle. But we don't know. We've really got to be guided by the price action. And so my play here is to position for upside, but have a plan to get out or to minimise risk should we start to see this sort of price action develop later on. I certainly wouldn't be charging back into the markets around where I are at the moment, and I wouldn't be getting aggressively long with leverage. This could all just be short covering. This may not be a whole lot of new buying at all, and it could peter out where we are now, get a bit higher. It could pull back, have another tilt at going up, then pull off. But I think it's a market we want to be very, very cautious of. Whilst having said that, we also don't want to miss out should it continue to go higher. So we've got to be flexible with our approach here. And look, if we look at the Nasdaq, just jump over to the Nasdaq now. You can come up with that. I can come up with that quite nice bullish scenario for the S&P 500. Nasdaq looks different again. It doesn't look like a strong market. It's further from its highs than the S&P 500, and it's a market that looks like it needs to do a bit of work before you could consider it's on its way off to new highs. So look, I think we just need to be careful of this market whilst probably giving the benefit of the doubt to the current momentum that we're seeing. Look, another possibility that we could see come into these markets, just going back to the S&P 500, another possibility is we see a big range develop. We see the market become range bound over many months, maybe over the rest of this year. It forms a big platform through here, which then could either be a big topping formation that rolls over, or provides the base for the next big advance upwards. So look, markets are always evolving. It's not about having rigid viewpoints. It's about spotting the possibilities and then using those tried and tested strategies to take advantage of them, or to minimize your risk when they go the opposite way to what we'd like to see. and we were to see a big range, this is really where momentum strategies can really stand out, because they can really help you identify what's moving. Because during these big ranges, if that were to happen, you also get a lot of stocks which continue to perform well, but they're just fewer and further between. It's not like the rising tide lifting all boats sort of mentality. And those momentum strategies can help you identify what's moving, and they can also help you avoid what's sort of like stuck in the mud, what's stuck in the range. So it's going to be interesting how this all continues to evolve and play out over the coming weeks. And now, look, if you're getting value from this, please hit that like button, and please leave a short comment in the comment section. Just, hey Jason, like the video, thanks. Just something really simple. It just tells YouTube that people are watching, people are engaging. Then YouTube will show other people, and if people are watching, well, then I'll keep making the videos. So please do that. It really helps. And now let's jump over and have a look at the ASX 200, because you look also interesting things happening in the in my local market, and it's been continuing. It's been continuing its run higher over the last week, and I think a big supporting factor for the ASX 200 during pretty much over the last 6 weeks, it's been the miners, it's been the resource sector, and it's also been some of the value plays like the banks, which have held up quite well during this volatile period that we've had. Same thing's been happening in the Canadian market. It's already at I think it's already just hit new all-time highs. So there are markets which are doing well. Look at Europe, very different story. It's the markets there are still quite weak, and they don't have any clear trend that you'd want to be getting involved with at the moment. They're sort of like steer clear of markets, but there are ones which are doing well. And look, as I've been saying, I think the strategy here is to give the bulls the benefit of the doubt. I think we want to go with this strength which has been developing, and not second guess whether it's about to top out and finish. Look, I still have my concerns that this market could decline over the next couple of months, just as I do in the US market. But we don't know. We can let the price action guide us. Whilst the price action is rising, if you're holding stocks, it's like, well, let that momentum go until you get a clear-cut signal that it's time to get out. And it's interesting. I've had some really interesting buy signals this week through my Motion Trader service, which is identifying the momentum which is coming through in some of these stocks. So look, there are definitely opportunities out there, but I think the key here, I think the big key is to look for upside exposure in the right stocks. And I've been talking about that over the last few weeks, and the right stocks for me are stocks which are trading above their moving averages. I'm looking at 50 and 100-day moving averages. I want to buy stocks which are trading above those moving averages. Maybe you pull back to the moving averages and now starting to rebound. They're all opportunities. It's the ones which are below the moving averages which I want to steer clear of, because I think they're the ones where the most risk lies. And as I was saying earlier, if you've been using wide trailing stops with your portfolio, then it's been possible to see off much of this volatility we've had in the ASX 200 since August. So look, I'm holding stocks which I bought back at this point still, and this volatility hasn't taken me out. They're all in my Motion Trader subscription service portfolio as well. I calculate the trailing stops, and it gives subscribers that clear-cut exit point, which I think is so important, rather than trading off fear of what could happen, of having that calculated exit point. I think it's so important that you have a means of doing that during these periods. And I'll show you what I mean. I've got an example, just a quick example I'll give you. This is a stock in, it's in my own personal portfolio. It's also one of my Motion Trader stocks, which a lot of my subscribers would have. It's an environmentally orientated stock called Calyx. What they do, they take CO2 or CO2 emissions out of cement production and various other things. Really interesting stock. So I've been in this for some time. So just quickly going back where it all started, moving averages cross. I had that momentum which I've been talking about, momentum to the upside. Got in here, set a wide trailing stop. So, initially came back for a couple of months, didn't get to the trailing stop, and then the trend's gotten underway. And look, I had people emailing me saying, look, why is this is a trailing stop, why is your stop so far below the share price? Why don't we move it right up, right underneath to protect our profits? But, thing is, like, it doesn't necessarily look like it on this chart, but these are some big swings that the stock's doing. So, there's 20% pullbacks in there. And but the volatility of the stock and the price scale makes it look a lot calmer than it actually is. But it's when real volatility, big volatility comes in, that the wide trailing stop comes into its own. So, despite this fall that we've had, I have and my subscribers have, we've been able to sit through this volatility, and the stock's up close to a new all-time high. Got really close here. Like, these things don't work with precision. But they, sometimes you'll clip the stop and get you out. Other times it will, just keep you in. But keeping those wide trailing stops give you every chance of staying in these longer term trends. That's what we're trying to do at the moment. And so look, it's I think there's good scope to continue to stay with some of these stocks. And if you can, you've got these right strategies, then I think that's the way that that's the way to play it. So look, now let's just quickly, just to wrap this up, I just want to go over and have a quick look at gold, because gold's continuing to develop. And so just look at this. I think the best thing that can happen for gold at this point in time would be for it to go sideways for a few weeks. Just sort of like consolidate. What we want to see, being supported. We want to see buy the dip, come in there, and hold it at this level. If it can do that, then it provides a platform for another advance. I think. Look, at the moment it's looking constructive. We've got this breakout. I think we've got to continue to go with it. But I do think we do have the prospect of consolidation. So I just go over here and I look at GDX, the Van Eck Gold Miners Index. This is a US listed ETF. Just looking at the price action here, it looks like it's like we have had a big run up. We had the breakout of this big wedging pattern. Big run from the lows. We've pulled back, but it looks like it needs to do more work. I think we may see this over the next few weeks start to pull back somewhat, and maybe we do get this, some sort of a sideways sort of move, and then from there it starts to move higher. Just putting some Fibonacci's on this, and look, I think we could see this pull back towards the 50% sort of pocket over the next few weeks. So I don't think there's a hurry to go chasing those gold stocks. It's very much on a case-to-case basis. Look, I've had some good signals from a number of gold stocks over the last couple of weeks, and it's just going to be a lot of the local stocks, Australian stocks as well as the North American stocks. I think they've been setting up nicely. So look, let's just watch and wait and see what sort of signals we get, what sort of momentum we get, and it's going to be interesting to see what comes up over the next few weeks. And there could be some good opportunities in that gold sector. So one to keep watching closely. So look, let's call that a wrap for this week. Thank you for watching. Thanks for joining me again, and hopefully that's helpful. Please hit that like button, and I look forward to coming back and joining you next week. Thank you.